Hello, everybody. We are back with Mr. Josh Schuler. I'll let everybody kind of roll in. They're all getting notified right now. The stream's starting. So how was everyone's process today? Any trades? Did you guys execute? Thank you, Adam. We are going to do a giveaway today, but we got to hit 150 likes. And then at the end, we'll spin the wheel and give away some credits. Yes, it's another Josh Squared stream. What else we got here? I sucked. Blue. Sad. Okay, well, so you mean you blew your account? You're sad, or did you not execute to your strategy, or what was going on there? Think a little deeper. How you doing, Josh?
Good, man. How are you, brother?
Doing well. You've been busy. I've been checking out your new site. It's it's clean. I like it.
Thanks.
We'll dig into that in a minute, but
yeah.
Long setup showed up yesterday. Closed too early. All right. Log it. Write it down. My eval's taking forever, but I'm halfway to target. Let's go. It's okay.
Go slow to go fast.
There you go. Sideways is good too.
Yep.
Just don't learn. Just keep not losing money.
There's so much about this is staying in the game, you know? Like,
sure.
It's staying in the game.
I get so many people that show up in there. They do that napkin math of they go, okay, so I'll make $500 a day.
Oh,
and I'll do that 5 days a week.
Yeah.
And there's 200 and something trading days, you know, and that's setting some unrealistic expectations for yourself. And realistically, once you really start going, you're going to have these days. It's going to be a lot of sideways and then big jumps, and then some sideways and some big jumps. It's not, when you hear consistently profitable, it's usually just not consistently losing. It's usually just the lack of losing. All right, I guess let's get started. Josh.
Yeah, brother.
We did mention it a couple weeks ago on another stream, but we're going to dive in deep here. You've got a new service, which everyone's going to get a couple months here with a code, free to try it, full pro version. Take it away.
Yeah. So this is SignalP, which the P is short for Playbook. And this started years ago. I read Mike Bellafore's book on having a playbook. So some of you will know Mike at S&B Capital, and he describes a playbook trade. And anybody that goes and works on their desk, they talk about having playbook trades. And I was really intrigued by that idea. And the need for a playbook trade was to be able to know, like, what is it exactly that I am executing? Like, actually knowing where am I good and where am I not, is really, really helpful when it comes to building out our development as traders. And so for a lot of years, I've worked with developing traders, and we've used 4-question trades as a process, a way to organize what you're doing as a trade. And I keep doing discovery calls with developing traders all the time, and I find that they actually don't have a trade still. They may have a narrative or areas where they're expecting price to go to X, but like putting that within a process is just really, really challenging. And so the idea behind SignalP is, okay, well, I'll just give you my playbook. How about that? How about you could start with my playbook, and then you could evolve off of that, or you can use mine as well. But the idea is that we can at least get an idea of what is when we talk about like what's a trade, like what is a trade? What are the 4 questions? How do we answer that? And I think the idea for this session is that we would look at these signals. So what these signals are, these are just alerts that were generated today of all different playbook trades. And so you'll see these little 4-letter acronyms here. Those all represent different playbook types. And then you can see the product. So for the library of playbooks, so these are all my playbook trades that we generate alerts for. And all of them have one single driving behavior that helps you know that thing is potentially in play. Now, that does not mean pull the trigger. That means this one condition that we've seen over and over again in markets and in the auction. Great. Now I pay attention, which this so helps the experience of a lot of traders who think that every price is actionable, every time is actionable. And what you find out is the longer, if you last in this industry, you want to save those calories, right? You want to save them for when you're actually doing something. So that's how I kind of go about my day, and thought, man, while you're trying to figure out yours, wouldn't it be great if we could just identify that? So what I was going to say is, let's pick a date. We can pick a historical. These are all the ones for today. We could look at these, or we could look at some prior date. And what traders on our platform do is they go and find a specific trade, and you can see the little save button over here, and then they can add that to like their signals. And what you're trying to do is you're trying to build a record of how are you progressing, and you can do it live or practice, but ultimately identify what's your anchor trade. So if we've got 13 different playbook ideas, you may find one of those that you're like, oh yeah, that's my anchor trade. And then, so what's an anchor trade, right? An anchor trade is the one playbook that trade that when nothing else is working, you know that if you wait for that, you have a high chance of taking alpha out of the market.
Okay. But let's so I'm going to summarize that real quick for some of our CFD traders. So, in our platform, we've got a way where you can identify your strategies, right? You can put your strategies in, you can organize a list. So
you can log an
checklist.
Absolutely.
Exactly. So you can come into our system, you can say, here's the preconditions for my trade. Yes. It has to be, a day after a trending day. It's got to be higher relative volume. You have certain characteristics, and that defines your strategy. I think most traders are comfortable, which, by the way, playbook, strategy are usually pretty interchangeable words.
Interchangeable. Yep.
So what Josh here is building is he's building a system that'll automatically monitor the market and check off those items for you, and then show up as a signal to say, okay, these are objectively hit checks on my for my strategy, for my preconditions to take this trade. It's not going to automatically take the trade for you, anything like that. It just gives you a much more structured way to align yourself with the strategy you're trying to take. Just one less thing you have to worry about, not having to go through the checklist yourself. This is going to pop out at you. But what's really cool is with the site, Josh here, he's got, I believe you kept the videos in here, right? If you have the pro account. So he's got a a great video series that he's made for years before this, that he's been teaching and he's been producing, that shows his style of trading that lead up to all the strategies that he's actually including in here. So you can watch all these modules when you're in here. You can see how his strategies work, how he trades, his heavy VWAP, heavy market profile kind of strategies for the most part, I think. So those are included, but additionally, you can go in there and make your own, right?
That's right. That's right.
Okay, so there's that huge baseline of strategies that he's got for you that you can take advantage of, and then you can make your own. So so you want to show us maybe some of these strategies, some older dates. We'll pick some older dates and see what would have happened if these signals, if you were following these signals.
I think we'll just kind of walk through the whole trade and even talk about like where, if we were going to enter, where we're going to enter. So that's why a historical one would be good. Before we go there, I'll just say, you can see there's one that just generated here for soybeans. So this is a trend continuation playbook trade. So what that means is that soybeans are in a trend day. So what does that look like? That looks like this. Oh, where's my, here we go. Right. So very clear trending behavior that's been identified.
Is this today?
This is right now. Yeah.
Okay,
so this is it just popped on here while we were talking, literally 2 minutes ago. And so now the idea is, okay, so what's the expectation? So the expectation is that we'll see the highest price at the end of the session. Now, soybeans has a shorter session than other products. And, what I would be looking for is, some, holding up here or like a pullback in this direction to get long towards that target.
Right.
Yeah.
So it's not an exact, hey guys, this is your exact entry point. This is your exact exit point. Although it does give you those price points, it's giving you, again, just sort of guidance of, okay, all of this is aligned as of now at this price. So now you're looking for that, those microstructures or however you do lower time frames to find entry where you're willing to put on risk for that trade.
Exactly. It's identifying the initial driving input and conditions and also adding some confidence factors to that. So then you can decide, okay, where, if I enter, where do I enter? And that whole idea is around how do I make sure that I am managing the one tool that we all have that we have control over, and that's risk. Right. I mean,
let's pull up one of the strategies actually. So maybe we could show the checklist with it.
Yeah. So let's look at that soybeans one that just came out here. So here's the idea. It's a trend day. We're looking for the highs in the last hour of the session. We'd be wrong if we stop one time framing. So one time framing is every 30 minutes we're making higher highs, higher lows. Or if we get back inside the initial balance, which is the first hour range, that would tell us, whoa, yeah, this is not working out. And then we got a playbook score. So this is, what all other behavioral things are in play that add to the confidence of, I want to be part of this. And so the fact that this is a 6 out of 9 is a pretty high score. So definitely we'll be watching that and see if I want to participate.
Right. And so all that's happening automatically. You're following the markets in near real time, and those items will get checked off. And then I'm assuming
I just saved it as a signal. So right now, so if we say that that's live, and it's an idea at this point, right? But now I can add additional criteria of like, if I enter, what price did I enter in at what time? What was my stop? And then at the end, what was the most favorable price, most adverse price? And then I can put images of, well, what did that chart look like when I identified this playbook idea? What did it look like when I entered? What did it look like when I completed? And you're starting to build your own personal library that you'll be able to go back and reflect. And, with a trend continuation, you'll find that all trend continuation trades look the same. Like it's always a trend day,
Right. Sure.
So let's grab something from the past and go back and do the whole deal.
Okay. I guess someone threw out a date in the chat last few months. Does that work? Or do you want to is there an easier way to pick it?
It's fine.
Someone in the chat, give us a date. And we'll see what would have happened with the signals on that date, just so you guys have an idea. I know there's a lot of discords out there that do quote unquote signal services, and they're very cryptic, and you don't know what's going on, and you're not involved with it, and they're obviously usually aren't something that works. This is a transparent signal service that lets you break down exactly the criteria that goes into the signal. And then again, Josh is giving you his handful of probably a dozen strategies built into it to get started with.
Yep.
All right, there's a few dates. You see them in there?
Yeah, we've got dates all the way back to 2024. So either pick a date, pick a product.
There we go.
4/9/25. Okay. Okay, and so then we've got a trend continuation in the Russell Nasdaq. So then which one do you want to look at? There's a couple here. There's ES, Russell.
I guess let's just do the ES.
The ES. So that's the day after trend one. So we'll just save that one. So we've got that one there. And then
when this triggers, you can get notified how.
So two ways, like in Discord, we have it where it posts in a channel, but then if you have this open, it notifies.
It just notifies you right there.
Yeah. And then it'll mark it as whether it's red or not. So then you can go and say, okay, oh, there's a new signal I haven't seen.
Okay.
All right. So let me select the date. We're going to go back to April 9th. Is that right? 9th. And so that's right off the open. Okay, so let's talk about this day.
And what was that invalidation, or as you put it, wrong?
Yeah, so this is wrong if we get back above halfway back of the prior session. So, what is this specific playbook idea? So this is called a day after trend. So what's the driving input? The driving input is that the prior day was a trend day. Okay, so that's the chief idea. And then we're opening inside of that prior range. So let's talk about the anatomy just so that everybody knows what we're looking at here. So I've got a composite volume profile of everything I can see on the screen. I've got the single, like this is the current session, like the full session volume profile. And then, no, that's a great question. I'm gonna add this. Let me open TradingView inside of a browser and we can go back and forth and see these. That's a good idea. Let's do that. One moment. It's our first time, gang, so we're getting there.
So while you're pulling that up, they're asking, can this be based on EMA, like how TradingView has it, or just more based on static price levels?
On an EMA, no. So I would not base anything on an EMA.
I think the EMA is going to be more of your discretion after you get the signal to help you know further criteria.
Exactly.
But those static price levels, those are calculated levels, of course, after everything's in
play.
Play.
We're measuring those based on auction behavioral statistics. And okay, so we're going to go back to that date again. We're looking at the ES, not the NASDAQ. This chart here. Okay, let's remove.
So while TradingView will have like indicators, Josh, I think, is giving you building blocks that are higher level structures. So like composite ideas of what a trend day is, or building blocks that are at that level, where TradingView is more of the raw on the metal. If you want to hit a price level and you have already determined your price level, it'll signal you on that. This is going to give you a way to pick and choose a few high level ideas to notify you, like, okay, now these conditions are met that aren't just algebraic necessarily, and now is a good time to look at this market and look for an entry. And then I would dive in, figure out your lower time frame stuff to figure out, is this a good spot for momentum? I see this piece of structure right here. How am I going to manage risk? Like, that's still up to you here.
I don't know why that is not compiling. Well, we can still get there. So our market profile tool is not showing up here. There it is. Okay, that's helpful. All right, great. All right, so prior day was a trend day, and you can see that these 30 minutes lower. The next day, so what's the premise? What's the premise of a day after trend idea? Okay, so let's go look at a day after trend. So the prior day was a directional day. The expectation is that if the prior day was a directional day, then the subsequent day.
By the way, he just quickly pulled up the playbooks inside the platform, and each one of them has a screenshot that represents this is what that setup looks like. So that's what we're looking at here.
It describes, what's kind of the premise or the condition around what I'm expecting to happen, because these are all based on where do I believe price is going to go, right? So the indicators that people use can be used as a way to help you fine tune the risk, but what they don't talk about is like, well, where do I think price is going to go? This is going to help you define where the target is first and what that expectation is. So if the prior day was a trend day, if we go back and look 5 years of data, the probability that the subsequent session will see follow-on behavior, meaning that we'll see prices in the direction of whatever that trend is, in specifically new cash ranges. So that means that the probability that once the session starts, we're going to trade below 5104 is pretty high. It's more than 70% over a 5-year rolling basis. Okay, so we've identified a target there. The belief is, again, if I'm not, well, not a belief again, but if I'm not past halfway back of the prior session, that would invalidate the trend. So if I trade back through
during just RTH, right?
Yeah, half of that RTH range, which we could just eyeball it here. So if I go back through 5307, that would invalidate that prior day's trend, and it would suggest that trend wasn't in play. So that basically gives me a field of play now that I can look to execute in. So that the idea is a target is here, right? Now I'm opening pretty close to that. That's not real great. So what I would look for is, do we get some early move higher first, back toward where value was the prior day,
without breaking the halfway point?
Without breaking halfway back before we push lower. And what happens is, if we go lower first without giving us that chance, then we just pass. Like, it's not an entry. So I don't know. I don't know how this works.
Let's see how it goes. You're in replay. Are you in replay? Yeah.
We can go back and try them out and then see where they are and try to get an idea of how to. So I'm going to add a couple other little indicators that I look at intraday. So one of these is I look at VWAPs. So I'll look at the trailing VWAP from the prior session. So, and then I will look at things like week to date VWAP, month to date VWAP. So you can see here we're below week to date, month to date.
Right. So you're not only looking. A lot of people look at VWAP and they're just looking at the current day session, which gives them it's like the lowest moving average in that sense.
That's right.
If you're using moving average, it's similar except for VWAP. But what Josh is getting at is he'll look at what's the VWAP look like for the week, the month, the quarterly, the annual, to get an idea of higher level trend, just to have some correlation with his entries.
Yep. Okay, so this is going to be right at the open here, and we're going to look and see if we get a move higher before we break that lower.
All right, so we're in replay mode, so we're going to step through it now.
We're in replay mode, and we're going to just step
This
through
is a signal that actually would have went off if you were on this random date we picked. So it might work, it might not, but this is giving you that structure of taking that strategy. Everything is set up. Everything's kind of marked out for you. Now, you guys find your entries and how you do that. But obviously, where's a really good place to risk? The closest you can to the halfback, because that's the invalidation point.
Yeah. Or as what I've noticed it just here, and we're looking at 3-minute bars, right? We went up and tagged week to date VWAP and rejected off that. But if you'll notice the open, we opened and just drove higher. So that we didn't even test the other side. If we go back through the open here, then if that happens before we go a little bit higher, then I'm interested in entering. So let's just see how that goes. So we're back testing that weekly VWAP. Okay.
Definitely getting a little flag here.
Okay. So right here, let's talk about what's happened. So we've come and tested the composite VWAP, tried above it, can get it, get back. Now we're back through that open. So now, and we're at the VWAP. So this is a good spot for me to enter. Our target's the same, right? Our target is to get to 5107. But the question is like, what would make sense from a risk rewards perspective? So what I'm going to put in here, where's the short position? So we're going to enter here. Target 1 is those new lows. And then we saw a little pop in volume that came from 5205. So we should not be able to go back through that. That's not real great. I mean, that's almost a 1-to-1 risk reward ratio.
So this is where you guys would individually need to determine based on your time on screen, your willingness on risk. Is this trade worth taking?
Yeah, ideally, I like to do them at 1 to 3. So the fact that this is closer to 1 to 1, that means this either has to like work or I'm immediately out. So let's just, for the sake of illustration, let's go ahead and do this. And we're going to put our stop up here. Right. And then we're going to go down here and we're going to do 2. So I like to enter in quantities of 3 because then when I get to target 1, I can take 2 off and then I've got a runner. Right. So that's another way that we can get some extra table scraps. So why entering here, coming back to the VWAP? So this is basically taking us back to kind of a neutral posture, and this can kick off some machines to start flipping the other way. And let's see if that happens or not. Nope, doesn't look good. One other thing, yeah, so they went right back. So that was a loss. Okay, why did I have the stop back here? So this impulse moved down. I placed stops behind where strength was. So we had some balance here, and then we had a break lower to an area.
Yeah,
but then we got some reaction back. So nope,
we had to build up in volume slightly in that area.
Yep,
sellers were in control.
Move away from that and come back. You should get out, right?
Yeah.
So that trade was a loss. It was done.
Right, but the idea here is it's giving you this structure so you can make these decisions better, and it's a little bit more clear. I know a lot of traders, they struggle to do the prep work. They struggle to check off the list. Working with something like this, I think it's really great because it's an addition to what we offer in TFT with building your own checklist.
Yeah. So if we go back to that, I would log it as a loss. What kind of favorable excursion did we get? So we entered. I mean, we got almost 0, 51.47, almost none. What would be the kind of the takeaway on that would be, yeah, it was not a good risk reward scenario. And so I'd fill all this out, take some notes, and say, yeah, need better risk reward. Update the signal. Oh, direction. Sure. What was the entry? Got to back adjust these because this is a prior, so 51.58. What was that target? It was 51.12.
Maybe after we're done here, you could pull up. So these are the built-in strategies you have. What maybe we could look at the build your own. What are the building blocks for that?
Yeah. All right, so let's stop this. We'll go back to real time. So if you just want to create a signal, and I do this In fact, I've got one for today. Let me change this back to today. Because sometimes you identify something that the signal has generated one. So one of them is the composite reference reversal. So let me pull up the NASDAQ here, and I'll show you what that reference is. So you notice that we've got a year-to-date VWAP up here at 25,397. So what's the premise? The premise is that if I go to a large composite reference like that, and we trade above it and back below it, market's reactive to that, and I'm going to look to be short on that acceptance back below there, back toward like the next reference would be the developing node here, like at 25,299. So
and when you say we call it composite, it's more than one day. More than one day. Okay.
Yeah. So in this, it could be a month-to-date or monthly VWAP. It could be a weekly VWAP. It could be a composite volume profile, but it's a composite reference. Okay. Something that's more than one day. This case, it's a year-to-date VWAP, right? So that's
a retest of the year-to-date VWAP. Look forward to kind of hit it, test it, reject it, and then short for reversal.
Yeah. So if it goes through there, then I'm looking for it to go back to where we're developing here. So that's the idea. We're not there yet, right? Mm-hmm. But now I've got that identified, and I created that as an idea. We'll see if we get there. But that's how you do that, is you go in and create a signal, and you can say whatever product that you want to do, and then you can put the playbook. Now, here's all of our playbook trades. If you have an idea for another playbook idea, you can just start creating one, and it'll tie it to your account, and then you can spec out the whole deal. What is an idea? Is it practice? Is it live? What's the target? So, in my world, when I think about a trade, I don't have a trade unless I have a target first. So I put on the idea of like, here's the target. If we got there, I may not know the stop yet. For this composite reversal, it would be whatever the wick was above it. I don't know what that would be yet. Like let's say we go up to like 34, it'd be like 35. It'd be right above that would be the stop. Whatever my entry price is, and then what my exit price, all that's determined later on. And timing is important. Like knowing at what time am I good. So that's there. That's how I can create a signal, and then it can be there. Whether I'm creating my own custom one, or I have an idea that hasn't actually generated a signal like this yet.
So the custom signals, they're price points that you're defining, maybe with some descriptions. Can you build the checklist items into those?
You can.
Okay, cool.
Yeah, so you can go. I'm gonna verify this because I think you can. But like here's one that I have. So no, I haven't added those in. So yeah, there will be a form in there. It's like this is a trend fade. So you would be able to go in and add all of the criteria like this, like what's the opportunity, what would I risk? Tell me that I'm right. Tell me that I'm wrong. What are other criteria that would say that I like this idea? And you can basically build out your playbook trades. So that's what we talk about, of like, hey, use these as an example and then build out yours. So we'll get that form on a patch today, and then you'll be able to do that.
Well, can you go over maybe some of the building blocks? Because I saw you have like day after a trend day.
Yeah.
Do you have a list of those that maybe you could?
Well, let's start with the one that I start everybody on, and that's initial balance go with. And so what's every trade and idea starts with a premise. So what do we mean by a premise? A premise is, what do I believe will happen as a result of this behavior that I can see in the auction? Okay. And why do I believe that is valid? Like, you may think, for example, you may go, oh, I'm going to buy a really cheap option going into NVIDIA earnings today, and that's going to, make me a lot of money. Well, that's the premise. What's the idea is, because you think it's earnings, it's going to move a lot. Okay. But if you go back and look at the data on that, you'd find that probability is really low that you would ever make any money off of it. Mm-hmm. But in this case, what's the premise? So when the initial balance is extended and there is significant available range left, there's an opportunity to join the controlling player. What's the data behind that? Is that first hour's range that we identify here, in 98% of all sessions of all products, we will trade outside of that range. Okay. And then when we get out of that, we'll extend that range about another 50% in, depending on products, about 50 to 60% of instances. We'll double that range in about 10 to 17% of those instances, a little bit higher for the ES. So then if I have like not exhausted available range in a day, what I've identified who is the player of the auction that is controlling it, and I want to align with them. So in this case, it's a buyer. I want to be with that buyer, and it's real simple. This trade, I am entering on the break of the initial balance. So it's not like I'm waiting for a time frame trigger. I'm literally like, did I go past that price? I'm in, and as long as I'm outside of that initial balance range, I'm pressing that trade. If I get back inside the initial balance range, then I'm out.
To the tick, or are you looking for any kind of
to the tick? Now, typically, and we could pull up one of those examples of an IB go with trade. I think that'd be helpful, because very, very seldom does the first break just go and run. It's typically like the second or sometimes tertiary break is the one that you go with. But like, once that thing's gone, we anchor to wherever created that push out, and then if you go back through that, you're out, because you're pushing the trade at extended range, right? So it's kind of one of those, it's got to go or it's not. So we only trigger these when we've got a lot of available range left in the day. So the two other conditions around this are, we have either, and we have them down here, so we have at least 50% of the expected range left in the day. So
these are some of the building blocks that automatically trigger.
Yep.
Okay. So these are, he'll get the form fixed today, but those building blocks are the ones you can pick and say, I want these conditions for the signal to let me know that these criteria are met.
Yeah. Now if someone, that makes a point. So if you create a signal, we won't generate those signals for you. Like if you create a playbook, we won't generate your custom play. We only generate custom ours. But what this does allow you to do is map and articulate yours, and then continue to refine it, so that hey, these are the things that are important to me about this trade.
Okay.
Right. And then at some point, if you want to, we live in the world where everybody can write software, right? So if you get this thing honed and you decide, hey, I want to build and get signaled for my own trade, you could probably put this into PineScript and put it in TradingView and have it, or Sierra or something like that.
Sure.
So kind of the two key criteria for us whenever we signal an IB go with is that we have an IB that's narrow or average, and we have 50% of the expected range left. So what does that mean? So over here we have a quick sheet that we generate every day, and you'll see, like, for each product there's an ATR of the initial balance, and then there's an expected range. So the ATR of the initial balance is what's the 30 calendar day average range of the first hour for this product. Okay. So like right now, ES is 57 points. NQ is 283 points. What's the expected range? So that is, what is the expected calculated range for that product based on option positioning as we stand? So today we're expecting 392 points in the Qs, 86 points in the ES. So just to give you an idea kind of where we're at. The NASDAQ has done 205 out of 283 of that first hour. So that's a narrow initial balance, but we've done 369 points out of that 392. So we have done more than 75% of the expected range. So am I interested in going with a breach of the balance in the NASDAQ? No, because I don't have 50% left of the range.
Right. It would be a statistically exceptional day for the day to go past that 100% point, right? Yeah. So how far are you really willing to risk to try to get possibly just a narrow part of profit? Obviously this is just statistics, guys, but this is, I use this same metric myself. I'll use a 7-day or a 14-day rolling ATR, and that'll determine kind of how much juice does this day have and how's this day looking so far.
Yeah. And what's the thing about statistics? Like, statistics are, they're not a guarantee, but what I think statistics do really well is that they help us understand what are reasonable expectations in a market. Right. And reasonable expectations are important because that's helping us stack probabilities in our favor. So if you're like, oh, I want to go long this product, but the expected range is 100 points and you're at 125 points already, are you stacking probabilities in your favor to keep pushing that? Probably not. But if you're expecting 125 points and you've done 25 points, there's a lot of range left to push, right? So it's just stacking probabilities in your favor. That's not a guarantee, but man, it'll help out. So let's pull up one of these IB go with and just take a look at them. So we'll use this one here this is Monday, the 23rd.
So this is the strategy when you have a student and they just start working with you, this is your go-to one.
It's the go-to one. So we're going to go back to Monday, and this is going to be, so this won't even trigger until after the initial balance is complete. So that's going to be 10:30 Eastern. And
do you think we could drop maybe or hide some of those indicators? I know.
Yeah. We're gonna absolutely do that.
Okay, great.
Oh. Okay, so let's look at where we are right here. So this is the initial balance. This is the first hour, and let's move forward just a little bit so we can actually see. We can see this range. So we've done 199 points on Monday. We had 283 points average. So it's a narrow initial balance, and I mean the expected range wasn't 392 on Monday, but it was close. So we've got quite a bit of range left. So what's the idea? The idea is I'm going to enter on the break of this, and what's the target? Right. So the target is 24,740. So we're looking for 740 down here. Okay. So let's.
And you're looking for a bar to close, correct?
I am not.
No. Okay. So the break on the tick.
So we're gonna actually break on this. Now the question is like, all right. So what would I risk for this? So that this idea is that we're gonna get outside the initial balance. We should not be able to get spend much time inside the initial balance. We should be able to push and run. So let's just enter here. Okay, where are we gonna be wrong? Well, there's a pretty good 3-minute bar that traded up to test the developing value and then pushed lower. So I don't want to go back through that price. So we're gonna actually set our stop up here, and then 740, which gets us out to 1.5 the IB.
Right. So you took you're measuring the size of the IB, and he's taking 50% of that as his target. So everything is correlated here, guys. So it's a measured move. We're using current volatility measured by ATR to have a reasonable expectation for a target, not just let me just see how far this goes. It's there's a pretty reasonable chance that looks like we're going to.
Yeah. So you can see how there was a little bit of interaction there at the initial balance first, right? And so my rule is on a stop is I don't pull the stop until I see new strength in the direction. And we got that here. See the spike in volume? So here's that. So now I'm going to come down and defend against incursion back inside that initial balance. Okay. And the trade is done. That's it. That's an IB go with.
Nice.
Now I put 2 as the I would have taken 2 off and then I would have had a runner, but that's IB go with trade. I like this trade because one, it forces you to wait. You wait for some structure to develop. People will say, well, but you took away so much opportunity because first hour there's a lot of movement, but you also reduced your risk. And as you're trying to stay in this game and get to a place where you have real good competency, staying in it is the bigger ask at the beginning. Mitigate your risk because it's the only thing that you have absolute control over. So in this case, by waiting that first hour, I can identify a clear area that I want to enter and a clear area that I want to defend and rock and roll.
Yeah. Love it. All right.
I have people go in here and I tell them, okay, so go in here and filter for all the IB Go With trades and go back and do 100 of them and practice every one.
I love that.
Then you will know how good you are. And you will have all these aha moments of like, oh my goodness, yes, that makes so much sense.
And make sure you guys, when you do that, use a platform, TradingView works, where you can go back in time. I still do this. I'll spend a couple of hours at night, several nights a week, and I'll just pick a random date in the past on a random market, and I'll just forward walk it. I'll start right at the open. I'll analyze the market. I'll see what news there was that day. I'll come to all those conclusions, and then I'll walk it forward and see how it plays out. Just keep it's practice, right? But don't just leave the charts open and then just go backwards where you can see what would have happened and bet on that. While that's a great way to gather statistics for what generally will happen, it's not a great way to learn how to execute.
Absolutely. All
right, Rod, you want to put up some questions for us? I don't know if we got the 150 likes or not. What do we got? Did we lose our producer? Oh, there we go. Why do you use bars instead of candles?
Personal preference. I trained around a lot of commodity guys, and they all use bar charts. So it's the same deal as a candle, right? It's open, high, low, close.
I think it's an easy way to get the color to go away, because the color can give you a bias of, oh, there's a big green candle, a big red candle. Maybe that's not what you should be interpreting for direction necessarily.
Yeah, absolutely.
Yeah.
So I have done that because I spend a lot of time looking at like here in the soybeans. Like I spend a lot of time mostly looking at how is this volume profile developing? How is this market profile developing? And I don't want the candles to really influence that. Sometimes I'll just make it a line chart. Yeah. Because it's the structure that's more important, so that I'm not like getting sucked in to whatever's happening on a small candle.
Right. Your motion's not going up and down.
Yep.
Just because the color's changing.
That's right.
Question with that: how come that it invalidates because of going to VWAP? Seems like a common place to find buyers on a trending day.
Yeah, it depends on when did we test that. So if you test VWAP earlier in the session, yeah, absolutely, that should get reactive follow-on behavior. If you're coming back to VWAP late in the session, no, that's a signal that you've lost the directional conviction and you should bail.
Yeah, at some point it is the mean. So
yeah.
But every strategy is different. So you might have a strategy that makes sense where under these certain conditions, bouncing off VWAP, even if it's not a trend day, is totally a valid place to do that. But for the most part, I agree with Josh on that.
Yep.
Can you do a help video for this? Very interested in using this.
Yeah, I've got a laundry list of videos that I'm working on. So I did one. I'll kind of try to do these every day of just walking through, like looking at the different playbook types and finding examples of those and starting to build a library of those, but then also just like how to navigate the platform so that you're getting the most data to help you.
And what's cool too, the TFT2 code will give you the pro level subscription. Right. You just have to go to checkout, and on checkout you enter the code, and that includes your video library, right?
That's the video. That's any videos that are current there and that will be added. It gives you the ability to save signals, create your own signals, kind of track your progress. We're actually gonna start adding to-do lists, like things for you to do that we know are helpful at you becoming a proficient trader. So those will be things that you can do. They'll track off. One of the to-dos is like, hey, get 100 samples in practice of a playbook trade. Like that's a definite great thing. Yeah, walk through the platforms, absolutely. So yeah, that's all there. If we have a starter plan that's free, and that'll be forever free. That'll always give you the signals that were generated from the last session, so you can always see those. But you won't be able to save them. You won't get real-time alerts. You won't be able to track your practice and stuff like that. So yeah, so all of this is based on the pro plan. So you can a couple of things also. Every morning you can come in and look at what's on the economic calendar for any product. So this kind of helps us set the narrative which narrative is where we find the trade. Right? So, what happened the last session? What are we going to believe is going to happen the next session? What are key areas of reference that we're watching? And then the learning areas. So we've got a couple courses here. This build a profile, that's for somebody who's like, I'm just brand new, man. I don't even know what I'm doing. You can start there. The pathway is the why and the what for where our signals came from and why we think that there's any validity to them.
How many of those is that an overview of why and what, or does that go through every strategy that's on here, or some of them?
That goes through every single one. It also explains the underlying principle behind why do I even believe that this is valid to look at. Right. So, and that's not just my own reflection. I mean, people have been using auction theory for decades, and there's some great prior wisdom leaning into that. In your own personal hub, so this is your progress hub. So this is where you can capture things like aha notes, so things as you're going and doing your practices, and you're like, oh, I recognize. Like I had a trader who was like, man, I realized that I'm way better on Friday mornings. I don't know what it is. Like Friday mornings are really great for me. And like, okay, great. Let's that's an aha moment that you've done enough to realize that your performance is better on Fridays. And so he's really keying around that. And that can help you figure out, oh yeah, I'm tracking. These are things that I'm figuring out. So you can add those into your journal. As you do practice trades or live trades, they start to add up. I mean, similar metrics are available inside of TFD, which I love. But this can also help you work towards identifying like what is your anchor trade. So in this case, 53 NASDAQ trades and 31 of them were the IB go with. So the anchor trade at the moment is IB go with trade on a NASDAQ, right? That's the anchor trade. Like that's the one that now there's not enough instances yet, right? There's not quite there yet. 100. And I would go, yes, I know. Why so many? Because guys, I can flip a coin 10 times and it'll be heads every time. But if I get 100, in fact, when we measure expectancy in the industry, it's always on 1,000. That's when you really know. So I don't think 100 is too much to get an idea of, yeah, I'm good at that.
Mm-hmm. I think a lot of traders struggle with recency bias and what's happened the last few days. Like, hey, look, this whole week, if I would have just done this, this, and this, I would have made so much money. And then they lean into that. They forget whatever they're doing. It's really hard to think of things in statistics. It's a different process for your brain to take a step back and go, okay, I'm just on this 100 or 1,000 coin flip process. I know heads and tails are going to come up. I'm going to have streaks of heads and tails, but in the end, I'll hit my 50-50 and the statistics play out. But yeah.
And that's a common challenge. It's part of being human.
Sure.
Right? During COVID, there was a podcast that I listened to. It's still around. It's called This Week in Virology. So it's these people all these virologists that talk about all of these diseases that are somewhere in the world that could kill us all. And and they have this quote, and it's like the plural of anecdote is not data. So what does that mean? It means we all have stories or experiences that are meaningful to us, and the way we are as humans, we immediately want to try and extract meaning from that. So you see a pattern.
That's how politicians work too.
Yeah,
it's almost all anecdotal.
If you looked at the NASDAQ of the last week, you'd go, it's never going to get follow-on behavior past another day because the last 5 days we've just been stuck in a range. Okay, that's the anecdotal thing. The data would suggest no, we have periods like that, but then we have periods where we move. Like today, we're moving out of that. We're breaking out of that range. So having a data perspective allows me to switch when the conditions change. If I'm locked in the anecdotal perspective, that's a very small recency bias kind of thing, well, then what will happen is that I won't know what's going on when it changes. And I will just keep trying to push the same thing that was built off that recency bias, which will not work and will lead to a lot of damage. So get the reps in, gang. Get the reps in. You'll know, is it worth spending 6 months and getting hundreds of instances in of replay around a structured idea to know where you're good, and then spend the rest of your life, taking alpha out of the market? I think so.
Yeah. Okay. if we have any more questions, looks like we didn't hit the like count. Should we, let's just drop it. Let's drop the link anyway. We'll do one giveaway. Raj, I'm going to force you to make this happen. We'll answer a couple of questions, but let's do one giveaway for everyone, even if we didn't hit the 150.
Awesome.
Questions on the screen. How do you trade when the market is very slow and highly pressured? Highly pressured. I'm not quite sure exactly what you mean. I don't know if you mean are we wedging into a level?
Yeah.
Slow, does that mean low volume, or do we mean price is moving slow? That's pretty loaded question, but Josh, if you want to answer that in some way.
Let's from the ones that I typically hear. So when someone says, pressured or like price is tight, the tempo is really lethargic, which, okay, how do you know whether tempo is lethargic or not? You've got reps to know that. So if, how do you handle those? Some people recognize, because they've got the reps, they know, hey, I'm not good in those. And so then they just stay on the sidelines and they wait until there's better tempo. So like I do that sometimes if I know we're coming into a big catalyst. So like the NASDAQ, probably, I don't know if we're gonna be able to get up to that price that I'm looking for. But we got NVIDIA after the close. How many people are going to make a big bet, a good directional bet when we know that we've got NVIDIA reporting after the close? I don't know many that would. I mean, when you've got binary information coming out, so it's very predictable that a market will start to get really thin and really lethargic, and I just stay on the sidelines. So sometimes you stay on the sidelines, other times you go, okay, well, I stop looking at smaller time frame stuff and I just stay anchored in what the structure is. And that's, a market profile or volume profile can help you stay away from that stuff. And that's a way that you can do that. So those are ways that I deal with those.
Yeah. I mean, I guess to interpret your question, it sounds like you've identified a market condition that doesn't work for you. So stay away from it,
Yeah.
You don't have to figure out how to be, I can trade 24 hours a day in every single market at any time. That's definitely not what you want to be doing. So I guess we could just go quicker here through these questions. We do have the giveaway link now. We're going to do one giveaway, $200 credit. We're going to keep the giveaway link up for a pretty short period of time. So if you do manage to sign up, you probably have a higher chance than normal. Do you use order flow as some basis for entries?
Yeah, absolutely. So if we look at this, this is not a true footprint because of the way that TradingView handles data, but this is showing you some imbalances, right? So they've got this new bar volume footprint in here. That could be really helpful because if you wanted to lean into strength in the NASDAQ, you could say, okay, well, we came back to an area of imbalance in here, after the initial balance was set, and we saw buyers back above that, then I could enter there and have a stop below that. Now I didn't have a playbook trade around that, so there was no entry there, but order flow, like the things you can see like on a footprint chart or imbalances are really helpful. Like let's just look at this area here. We were balanced and then we see a spike in period volume and then we see some stacked imbalances there. So initially, where would I put a stop? I'd put a stop right below that. So it's a really great way to minimize your risk and to know what price is good to defend and what price is just arbitrary to defend.
Right.
Pick prices where you've seen new strength come in and defend those until you see additional strength. So here we had a little bit of a selling imbalance, but then we went back through it. Okay, well then now I know I could pull my stop up a little bit more. Now they broke above that. I could put the stop. There's a little bit of imbalance here. I could pull the stop here and just trail from strength to strength to strength.
So really identifying strength, we're only working with a certain number of data points.
Yep.
All of us. You could be using Bookmap. There's, of course, the data point of resting orders. So seeing that could be a way for you to identify a pattern of strength. So if there's a lot of resting orders and it holds, that's your point of invalidation. Big trades, you see the bubbles in Bookmap. He's identifying them just in a different way. He's looking at it as a strength in a move by looking at the volume candle, looking at the directional movement, and he's kind of getting the same amount of information.
Yep.
It's different. People I'm sure will bash me for saying that, but it's overlapping.
It's all of these tools are doing what for us? We're trying to suss out how are participants acting around the only indicator that everyone can see, and that's price.
Yeah.
Right. So using why do I use a market profile or a volume profile? Because that's telling me how have participants throughout the whole day organized price. So what's an example of that right now? I mean, I've got a bullish imbalance here, right? I have an area down here we didn't do much activity. We're imbalanced to the upside. So if you have to think like a bell curve is your friend, so to get to equilibrium, yeah. So likely we'll go get that price that I'm looking for, but we're running out of time to get there in enough time that I think we could get a reaction that would take us back towards the middle. So I definitely wouldn't take a short here.
Right.
For certain.
Does it have a community type page where you can share and swap setups with fellow traders?
Absolutely. Yeah, we got a Discord server that we've got like a pro chat. So anybody that's on the pro plan, you get in there and we swap ideas and work on progress. And so it's trying to do development at scale as opposed to where it's been in the past, where it's been more one-on-one, which I just don't have. There's not that many of me.
Nice tool. Just subscribed. I'm going to analyze it, add it to my daily analysis.
Awesome. Sounds great. We'll see you there.
Does it have a plugin for automated trading, algo building?
Not at the moment. It does not. I know on our roadmap we have the idea of having them as like a study that you could load in a platform. So rather than like it triggering on the inside of Signal, it would trigger on your charting platform. So there'd be like a label that would pop up and build the whole idea. We've got that built in Sierra, but that's just an internal thing that we use right now.
Would you rather trade one instrument or multiple? I hear this a lot, and I know a lot of people would love to be. I just trade the NQ and I trade it every day, no matter what. I think that's that would be the one where I would be. You don't have to trade every day. Is the first part.
Yeah, I think it's one of the things you discern. Mm-hmm. Are you maybe you're a one playbook trade, but you're multiple products, or maybe you're just one product, but you have multiple playbook trades for that product.
Exactly. Like there's no one size fits all strategy that just works across all markets.
Yeah.
And sometimes markets are hot. I mean, we saw silver, the metals. Sometimes you want to take advantage of that if you have a playbook that can sustain in those markets when they're running like that. It's good to have in your back pocket because some of those days can make a year,
Absolutely.
How do you deal with bad drawdown? It makes me not trust my system, make mistake, which makes it worse.
Yeah. So,
I'd say back testing, right?
Yeah, I mean, well, and walk forward.
Walk forward back testing.
Right?
Correct.
I think it's an important distinction between a back test and a walk forward. So part of the reason that we have the historical signals on here is for someone to go back in time and trade these, and you're getting a log as if it's real. What's the benefit? The benefit is you're not actually having drawdown, although while you're practicing it may be drawing down, but as you practice you're going to get better and better. Like I had a guy that he got his 100 laps in, and then he had stats on that, and then he went back and he redid those 100 infinitely better than the first, right? And he's still just sim, like he's just doing practice replays, because if he knows that he's good, what does he get at the end? He doesn't have the periods of drawdown, because then when he's actually going live, he's building trades that are spec'd right on risk to reward. He knows how to enter and defend them. Like his equity curve is going to be up and to the right from the start. So if you're experiencing drawdown significantly, that's a good question, a good place to stop and say, okay, like, am I clear on what my playbook is or not? Or am I just, clicking around movement?
Right.
Which that's going to put you in a more defensive position.
It's two conditions, right? It's the strategy and it's the execution. You have to identify, because your strategy isn't going to work forever until the end of time, right? Not all strategies are going to be like that.
They do not.
And some will go through different regimes. So you have different market regimes where your strategy is going to work poorly, and identifying that, tracking it over time, you might need to drop the strategy. But if you haven't identified it, is it my strategy or is it my execution of the strategy? You need to be very clear about yourself and your process and what's going on there.
I was telling the team yesterday, because day after trend, which is one of our playbook ideas, which we did that example of, with the used to be if the prior day was a trend day, I could go home in a position in the direction of wherever that trend was, and like didn't sweat at all. Like I expected that I would get filled either right after the open or overnight. The performance of this in that type of confidence has degraded because of the increase of 0 DTE options. So we do not get follow-on behavior like we used to. Like even yesterday. So yesterday I was looking for a day after trend trade in the NASDAQ because the prior day was a trend day lower. We opened, we started to move in that direction and then immediately reversed. And the impetus for the reverse was hedging flows. That didn't exist 5 years ago. I mean, they existed, they just didn't exist in the same way. And so I still look for that playbook trade. I execute it differently. I've seen the stats to go, okay, yeah, I can't just like set it and forget it anymore. I have to look for additional layers to suggest that this is in play. But you only get to that by having reps to know when you're starting to see variance in it, right? Same thing would be trend continuation. Like in 2024 and 2025, we had the most intraday trend days lower invalidated than any other time in history. Meaning that we're out past 2 times the initial balance by the time we get to lunch, and by the time we get back to the close, we're back to the initial balance. Like that pre-2023 would not happen.
Wow. And you think it's because of just options volume and it being on shorter volatility timeframes?
Yeah, zero DTE. So what happens is there's puts that are monetized, and as you get down and push those ranges, there's something called a RIP value of an option, which is the theoretical price at which someone starts to take profit on it. And they'll start nibbling on some really cheap out of the money calls when we're barreling lower. But now there's all these people that have tools that track that stuff, right? So they see that, they start barreling on that. So then they pull the puts up, and now they're compounding the calls. And what used to take a couple days to get us a reversal now happens intraday, which is wild.
It's wild, and it invalidates certain people's strategies, but that's also opportunity, guys. Yep. All right, Let's spin the wheel.
All right,
here we go. Looks like we didn't hit 150, but we are still going to do a $200 credit, and that
test my pronunciation
is we always like to test the guest's pronunciation. Some of them are difficult, lovely names, but difficult to pronounce.
Well, it's just our unsophisticated English. Aurora Freire.
I like that name. It's a good name.
I like that. It's a beautiful name.
Congrats to you, and you will be getting emails shortly from Raj with your $200 credit. You can use it at checkout.
Awesome.
I think that's it.
Okay, guys.
Let's just go ahead and end it there, and we'll have another. We do these every Wednesday, so not with Josh, but he has come on a lot. He is one of our favorites. Check out his product. Again, it's been on the screen. TFD2 gives you 2 months of pro access to the signals he's got built in, and the video library that explains each one of those strategies. If anything, make use of that. Get familiar with the platform and understand his strategies, because that's a lot of his experience put into those videos. So you'll get something out of it. So turn off Netflix, watch some videos on trading.
Sounds good. Thanks, brother. Appreciate you.
Bye, guys. Thanks.